YouTube, welcome to another video with the House Money Investing channel. In today's video, we're going to just go over some stuff that happened today as far as in stock gains, price movements, a few new stock picks I'm adding to the watch list, and maybe some stock news. As you can see here on the screen, the first thing we have is MGA, Mag Silver. Of course, this is a precious metal play, and it hit its 52-week high here today. Then we got a SPAC NNDM, is up pre-market 5%. Square hits its 52-week high. All the price movements that I display are stocks that I actually own, so kind of keep that in mind. IWM hits the 52-week high. Then we got Pinterest, Pins, hit its 52-week high. PayPal also hit the 52-week high as well. Then we got X1, Virgin Galactic, and Hyliion all up around 5% today. Then we got SSYS, it was up 5% as well. Then we got some more price movements. HIBL up 7%, MTLS up 5%, LC up 5%, MaxR up 5%, ACB, Aurora Cannabis up 5%, NNA up 5%, and then SSY hit its 52-week high. Then out of my stash account, I just posted some. I got a dividend today of 10 cents from ETF they call Big Money. As you can see, it reinvests. So I am using the.
A new important message has arrived.
Sorry about that. I am using the drip feature. Some other ones are VF Corp, Mantep International, Defending America, Combat Carbon, and Do the Right Thing. And these were some this month, from the 18th till the 22nd. Then I added SPY back to the watch list. This is something I just bought yesterday for a swing trade. And this is an ETF as well. Pays a 1.63% dividend with a small market cap of $61 million, and it's almost near its 52-week high. And this basically is a fund that provides exposure to the S&P 500 with systematic options overlaying strategy. So like I said, I'm already in this position for the swing trade for this month. I wanted to swing trade it in another account, so I added it back to the watch list. Then we have good old Open Door. As you see, it was down today. Caught some of it back in the aftermarket. This is something I own already in Robinhood. I'm currently up 68.85% of my position. I'm looking to swing trade this month and see if I can't gain some more shares of this or fractional shares in another brokerage. $282 million market cap. This thing still has a run up about 20%. This is a company out of Allen's, and it kind of gives you exposure to the investment services sector of the market. This thing IPO'd here in early July, late June. So fairly new IPO. And basically Open Door operates as an online platform for buying, selling, and trading in residential properties. This company was founded on December 18th, 2020, headquartered in San Francisco. So of course, like I said, it's a platform for buy, selling, and trading, within residential property, residential areas. So basically, it's Open Door, so it's basically like you open the door to your house of stuff you got to sell, so people in the neighborhood can see what you're selling. You can buy stuff from other neighbors and things like that. So I see this app, making some gains here in 2021. So that's why I'm swing trading it to try to build my position in it, and I'm already doing well in it as well. Then a new swing trade for me, MGNI, Magnite. This was up 16% today. It's up 2% after hours. at the moment. A little over $3 billion market cap. It's near the 52-week high. The buy rating from 7 analysts is 100% hold. Actual EPS killed the expected EPS. They were expected to take a loss in quarter 3, and they actually had some good earnings. The sector is relevant to is consumer and retail, as well as media, and this is a California-based company. And basically, it's provides a technology solution to animate the purchase and sale of digital advertising inventory for buyers and sellers. They have an online website, mobile applications, and other digital media properties. So of course, digital advertisement is huge. So like I said, this is a new position for me, so I'm looking to gain some fractional shares in this, and hopefully my swing trade on this one is successful. Then we have RMG. This is a very hyped SPAC. This thing has ran up. It just IPO'd back in, I think, April. It kind of caught wave just last month in November. I've been holding out on jumping in this position just because of all the hype, and the PE ratio is like 1900, so it's extremely high. A small market cap of 822 million, and it is at its all-time high, 52-week high, or just right there. They deal with investment services. It's a company out of New York. Like I said, I could have gotten it earlier and rolled the gains like everybody else, but it's still a SPAC. We don't really know who the merger is going to be with just yet. We have speculations and companies in mind, but basically this is just a blank check company. So I let all the hype die down, and now I'm gonna go ahead and jump in it and see if I can't catch more upside. When they do merge, then it's going to jump. So hopefully my swing trade, once they merge, I can pull out my capital I put in and go ahead and lock in those gains in the market. Lock in the fractional share that I'll get out of it. Then you got JAGG. This is something I swing traded yesterday. This is a bond ETF. I wanted to swing trade it again, so I went ahead and put it back on my watch list. It pays a 1.88% dividend. $840 million market cap. Probably run up another 5% or so. But it's basically U.S. dominated bonds for many sectors. Bonds are a good way to save. Banks don't really give you much of an interest rate. It's less than 1%. So putting your money in a bond and getting that 1 to 2% return on your money with very little fluctuation in stock price is always a good way to save money, in my opinion. So it's just another way for me to kind of save a little bit of money, and as well as try to gain some fractional shares of this company. Then we got BBJP. Both of these are JP Morgan bonds. I'm sorry, JP Morgan ETFs. This one I swing traded as well this month. So I do currently have a position in my Robinhood portfolio, which is down 1.39%, which is cool because I got a dividend paying basically already for December 28th. It does pay a 1.15% dividend yield, good PE ratio of 27, $6 billion market cap, and this thing still is going to run up another 5% in my opinion. And with it being an ETF, it's not going to fluctuate very much. And this is a Japanese ETF on large and mid-cap stocks in the Japanese area. So this gives me exposure to another market besides the United States. Probably 95% of, my portfolio is based out of the United States. So I've always liked to, find some good Chinese plays, Japanese plays, European, Canadian, stuff like that, just to give me exposure to other markets. So I will be swing trading this again in another account. Then we got BBEU. This is also another JP Morgan REIT. This is a European REIT. I'm swing trading this. I just started a position in it this month. I'm up 0.35%. I'm getting a dividend for it on the 28th. Pays a pretty good 2.33 dividend yield. Nice PE of 36. Over $3 billion market cap. It's not going to fluctuate very much in price. I'm just basically, if I could just swing trade it and get $1 out of it, just to build some kind of position in it and collect a small dividend over time, that'd be nice. Just like the Japanese stock ETF, this is a European ETF focused on large and mid-cap companies, so this will give me exposure to other markets as well. Then we have Wells Fargo. I own several different fractional and whole shares of Wells Fargo throughout my 8 or 10 different brokerages. This is something I swing traded this month as well. I added it back to the watch list, and this is something I want to still swing trade. Banks are going to make a huge comeback. They're able to do share buybacks. Wells Fargo, a lot of people sleep on it or discredit it, but I'm doing pretty well in Wells Fargo. In my Robinhood, I'm up 20.78%. They do pay a nice dividend of 4.21%. 77 PE, $125 billion market cap, and this thing has a great upside. I would say probably about a 60% upside on this stock, so I'm looking to catch that run up. And Kramer, he shared his opinion on Wells Fargo and Caterpillar, and he had a positive outlook for Wells Fargo, and this was just 4 days ago. Fast Money also picked Wells Fargo as a buy on December 21st. And Wells Fargo, supposedly they're going to sell their student loan portfolio. So all three of those are bullish sentiments. 28 analyst ratings got it 60% as a hold, 28% as a buy. Earnings, they kind of been fluctuating. Let me see, since the pandemic, they were down. They were down on second quarter. Third quarter earnings were pretty good. And then we got fourth quarter coming up here. This is in the banking sector of the market. The one in my Robinhood, I purchased this back in October, and like I said, it's up 20%. I just got a dividend on December 1st, which was reinvested right back into the company. Then we have another play here, which is going to be new to my portfolio. XL Fleet. This thing just was a merger. Well, this is a new IPO since, I believe, November. And doesn't pay a dividend, but it is in an uptrend. Looking at the technicals, almost $1 billion market cap. This thing's up like 40%. It's an EV play. Of course, it's going to be the automotive sector. And this is basically a blank check company still at this point. So once the merger hits, I should get some gains for it. Pull up my principal and keep those gains into the stock and start building a position in XL Fleet. Then we got some dividends out of my Robinhood account that were posted today. We got VT, VEE, DHS, VIG, VYM, ESGV, HAL. Then another new company. This is going to be a new one for me as well. First time swing trading this one. Rogers Communications. It's a Canadian telecom company. 3.25% dividend yield. $23 billion market cap. Still has about a 10% or more upside. 13 analysts got it as a buy. And for me, Rogers Media Unit, I think it's worth far more than the market's giving it credit for. If that continues, Roderick can sell some assets to create significant value. With the Canadian wireless market far less penetrated than the US and Europe, a long growth run rate exists for this company. And it's basically the leader out there in Canada, along with Bell and a couple of others. Third quarter EPS was really great. And like I said, this is telecom out of Canada. So they have like wireless communication services, cable, media, that type of stuff. So this looks very promising, and it's undervalued right now, so this is a great value, and they have a lot of room to grow. Then we have Edit. They do biogenetic editing. It's $5 billion market cap. It's got about 10 to 20%, I'd say 15% run-up potential. And I looked at 10 analysts, 50% hold, 50% buy. EPS has been great since the fourth quarter of 2019. And this is, of course, exposure to the pharmaceutical side. They're similar to CRISPR, with the gene editing. And it only takes one breakout, development for this thing to really skyrocket. Then we have RPM. Great dividend play here. I've swing traded before. And it's something I already own, but I want to swing trade it again. 1.64 dividend yield. It's a smaller dividend, but it's a guaranteed dividend, if that makes any sense. Over $11 billion market cap. Still has about a 10% upside in this one as well. Looking at 15 analyst ratings, 53% buy, 47% hold. Great EPS. They've been, doing pretty good on EPS since quarter 2 of 2020. Expected EPS in 2021 is going to be great first quarter. This gives you exposure to the material sector of the industry. This is a company out of Ohio, so they've been making a profit, turning a profit, as well as paying that consistent dividend. RPM engages in manufacturing, marketing, the sale of coatings, sealants, building materials, and related services, down that kind of aisle. The industrial segment and maintenance, they have products for like roofing, water systems, flooring, passive fire protection, corrosion control, high performance ceilings, bonding solutions, infrastructure rehabilitation repair, and other construction chemicals. The consumer segment has rust preventative products, special purpose and decorative paints, chalk, sealants, primers, nail enamels, cement, wood, care coatings, and other consumer branded products. The specialty segment of this company has like cleansers, restoration services, equipment, colorants, exterior finishes, edible coatings, and other specific original equipment manufacturer coatings. So a wide variety of stuff, to do with the materials market. And like I said, it's a guaranteed dividend payer and a long-term play. So definitely something I'm trying to build my position in. Then we got BCE. This here will be a new play. I've never swung trade this one, but I was looking at this dividend yield, 5.78%, $38 billion market cap. Still has a 20% upside. 16 analysts, 44% hold, 44% buy. And basically the network improvement that can result from BCE's fiber to the home build out will result in wireline share gains and margin improvement. So a bullish thesis on this. Second quarter EPSs were poor, and the first quarter, but they brought it back up in the third. This is also a Canadian company. relative to media and telecom networks. And they basically do communication services to residential businesses and wholesale consumers. And they work with Bell Wireless and Bell Media. So basically, I'm going to be into, Bell. So this is going to be the second Canadian company here for the telecom services. So I got basically the top two dogs over there. And I mean, both of those have a lot of room for growth. Then we got FANG, Diamondback Energy. Great dividend play as well. 3.41% dividend. They have a constant growing dividend. And this thing has like almost a 50% upside on it. And basically, the stimulus is going to be a great catalyst for this stocks. Analysts got it at an 89% buy rating. This is dealing with like oil. And, oil's had like the worst year, so hopefully it doesn't bleed into 2021. Basically, Diamondback is one of the lowest cost oil producers in coverage, in the coverage that they're in, which is out in Texas. So one of the cheapest places they can get oil from out of Texas. So of course a lot of people are gonna, get the oil from them. They've been doing pretty good on EPS as well. And just a further background, Diamondback is an independent oil and natural gas company. So they do like acquisition of oil, development, exploration, unconventional exploration, onshore oil and natural gas reserves. It operates through upstream and midstream service segments. The upstream segment focuses on operating out in West Texas, and the midstream is out of Midland and Delaware Bisons. And this is a company out of Midland. If you're from Texas or in Texas and you're familiar with Midland, then their main thing out there is the oil field. So this is one of the major companies out there, one of the major private companies that they have, and they are selling their oil at a great price. Excuse me. Then we got Anthem. 1.2 dividend, $76 billion market cap. Still has like a 10% upside on this stock, in my opinion. 72% buy rating. And the growth earnings for the long run should be another, 12 to 15%, which was around the 10%, Basically, the EPS was rising. It took a dip, of course, because of COVID. But this is basically healthcare services out of Indiana. It's an Indiana company. And it provides life, hospital, medical insurance plans. It does like commercial and specialty businesses, government businesses. It has a lot of national accounts, individual accounts, stuff like that. So this will be in the medical insurance, which a lot of people, like to have health insurance and life insurance and stuff like that. So I see Anthem as a growing sector with the stuff that's been going down in the pandemic. Then the last slide we have here is from my M1 Finance account. These are all house money swing trade positions. So I put in $482 into 5 different stocks, which is about $90-something or so on each of these stocks. They were all based around like $26 per share. So I got about 3 to 4 shares of each. So far, since I've been swing trading out of M1 since June, I'm up $248 and up 29%. So that $248 profit that I've made since June, I've transferred that into my other brokerages that offer fractional shares and stored them there. M1 does offer fractionals, but I like to use M1 to swing trade out of. I'll buy, 100 stocks, put them all at 1%, and put a few grand in it, let it sit for about 30 to 45 days, sell everything, take my profits, in all the companies that I profited in, and go buy those in other brokerages. As you can see here, my biggest gainer thus far is Canopy Growth, CGC. So let's say today I was going to, finish my swing trade. I would withdraw the 482 of principal that I got, and then I'll have, I'll go buy Canopy Growth in, let's say, Robinhood for $4.93. Well, now that's basically house money, because that's what I made off of gains. Hence, that's why I consider it free stock. So then I'll just have $5 worth of Canopy Growth just sitting there that can compound over time risk-free. And then doing this every 30 to 90 days, I'll steady add to these positions. That'll be it for today's video. If you liked it, hit the thumbs up. Subscribe, hit the bell if you want to follow my journey. I really appreciate it.